David Joy, the first quarter 2015 is over and the markets were essentially flat. Was that what you expected at the start of the year, considering oil was low and the job numbers were improving?
No, I actually thought it'd be a little bit stronger than this. I thought we'd have some more economic momentum, and I thought that would translate into decent earnings, outside of the energy patch, but it hasn't. And not only that, I didn't anticipate that the dollar would be as strong as it is, especially against the euro. So add to that the bad weather that we've had, it's turned into a quarter where the market has just treaded water.
All right, we have earnings season coming up fairly soon for the first quarter. So how much will that stronger dollar hurt?
Well, it's going to hurt a lot. And if you look at the performance within the stock market so far this year, the only companies that are doing well are those that derive most of their revenues from the domestic economy, those that more overseas oriented, really underperforming. And so it's going to be a big hit when the earnings announcements come out.
Does the market still just keep coming back to the Fed? Everyone keeps looking to Janet Yellen. Does she just hold the key for all this?
I think in the first half of the year, yes. I think the market is a little complacent about the approach of the first interest rate hike. But as we get a little closer, I think the market may be due for a little bit of a pullback. On the other hand, I think once we get beyond that first interest rate increase, the market can do better because it will realize that maybe by then the economic data has been a little bit stronger. Maybe earnings in the second half will be stronger.
So with all this in mind, how are you managing money right now? What are you telling your investors?
Well, I like equities better than bonds. I think yields are going higher, so I think you want to be a little bit overweighted equities. In the domestic market, I think you want to be very selective. Consumer discretionary may be the place to be. Consumers have a lot of disposable income. They've been very cautious so far, but I think that's kind of the way you want to play it domestically. On the other hand, I think you'll get better returns this year from the Eurozone and from Japan, precisely because of the activism of their central banks.
Do you think we're going to get a comeback in the oil patch? Energy got hit very hard this winter, brought down the high yield sector. Time to start nibbling away?
I think it's a little early yet. We're approaching the shoulder months, typically kind of a weak period for energy stocks. On the other hand, they're getting a little bit cheap. I know the price earnings multiples are high because prices have come down, but so have earnings. But at some point, I think we'll find an opportunity there, but it might not yet emerge, maybe for the next 3 months or so. But at some point, it's going to be a pretty good buy.
What about financials? The banks have really underperformed the S&P, and a lot of people say if the market's going to head up, you need the financials to lead. What about the big banks?
Yeah, I like the big banks. I think, my expectation is, as I mentioned, the economy is going to start to improve with the weather. And I think you'll see that translate into banking activity, lending activity, and so forth. You also would like to see interest rates move a little bit higher to allow them to expand their net interest margin. That hasn't happened. We've been expecting it now for a long time. If it happens, the financials, particularly the banks, will do well. If it doesn't happen, they may continue to underperform. I think they're relatively cheap. I don't think there's much downside. But, if they're going to perform, good things need to happen on the economic front and on the interest rate front.
All right, thanks a lot, David Joy.
My pleasure.
Thank you for watching The Street.